You know that feeling, right? Trying to stay informed, especially about something as big as the UK economy, and it just feels like, well, noise. So many headlines, different experts.
It's overwhelming, definitely. Information overload.
Exactly. So today we're going to cut through that. We've dug into some recent reports, the ones making
Oh.
waves, about the UK economy.
Uh-huh.
And our mission, really, for you listening, is to get to the heart of it. What are the real challenges? Where might things be heading? But, without the heavy jargon.
Just the key insights.
Precisely. Think of it as your essential guide to what's actually going on.
Okay. Well, looking at the sources, the first thing that really jumps out is this. Um, the sense of real unease. A lot of vulnerability being highlighted.
Yeah, you can feel it. And the big one, I suppose, is from that Matthew Lin article. It doesn't pull any punches.
No, it really doesn't.
Predicts a full-blown financial crash, says it's unavoidable now. That's pretty direct.
It's a very strong statement. And it's
Yeah.
not totally alone in that kind of sentiment. The sources also bring up that IMF report
Ah, yes, the International Monetary Fund.
and the language they apparently used.
Mm.
Quite stark. Describing the UK's performance relative to other developed countries as, I think the phrase was absolutely just annihilated.
Annihilated. Wow. Okay. So not just struggling, but actively performing poorly compared to peers?
That seems to be the implication drawn in the source, yes.
And the source links this pessimism to, what was it? Trade wars and the IMF's own forecasts.
Those are the two main factors cited, yeah. Global trade issues and that specific, rather gloomy IMF outlook.
But it feels like there might be more going on underneath, doesn't it? Deeper issues.
I think so. When you connect the dots with other points raised, there's this significant worry about businesses and people actually leaving the UK.
Right. That point about SMEs, the small and medium-sized businesses, and also wealthier people, entrepreneurs.
Thinking of relocating.
Yeah, and taking their capital with them. That suggests a real dip in confidence, surely.
It certainly points to concerns about the domestic economic climate, yes, which logically brings us to another major theme in the sources. Public spending and borrowing.
Ah, yes. Rachel Rhee was quoted sounding quite alarmed.
Very much so, talking about spending being out of control and warning that a crisis could hit far sooner than anyone realizes.
Strong words, and there are numbers to back this up, aren't there, that ONS report?
The Office of National Statistics, yes. It showed borrowing was $15 billion higher than expected just in the run-up to March.
$15 billion over forecast, just in that short period.
Correct. And the total borrowing for the last financial year, $151.9 billion.
Wow.
And the source makes a crucial point. This is debt. And with interest rates climbing.
The cost of just servicing that debt goes up.
Precisely. Which feeds into this idea of a potential debt spiral. Is this level sustainable? That's the big question.
You look at the debt to GDP ratio, the amount owed versus the size of the whole economy, and it does look, well, high.
It's certainly a figure that warrants attention. A high ratio can definitely constrain future economic options.
And it's not just abstract numbers, is it? I mean, the source even brought up those everyday things, potholes, that unfinished highway project in Liverpool.
Yeah, the anecdotal evidence.
It makes you wonder, doesn't it? If we're borrowing all this money, where is it actually going? Is it being invested effectively?
That's a fair question. Those visible signs of infrastructure strain can sometimes reflect broader issues, perhaps underinvestment or maybe inefficient allocation of funds.
And if you're not investing properly in things like infrastructure, that surely holds back growth in the long run.
It can certainly be a drag on productivity and potential, yes.
So all this borrowing, all this spending, it inevitably leads to thinking about taxes.
Unsurprisingly, yes.
And the expectation highlighted in the material is more tax rises, possibly in the autumn budget.
That seems to be the prediction, yes, which adds another layer of pressure, potentially, for households and businesses.
It feels like they're being squeezed from multiple directions.
It does. And there's this concerning feedback loop mentioned. Corporation tax revenues are apparently down.
Meaning companies are struggling.
That would be the implication, yes. Less profit, less tax paid. And at the same time, VAT receipts are also reportedly lower.
So people are spending less, cutting back.
Which again points towards a weaker economic environment overall. It affects businesses, affects consumers, affects government revenue. It's all linked.
And we saw that concrete example, didn't we? Morrison's closing stores.
Yes, 52 cafes and 17 convenience stores. That's quite significant.
And the source directly linked it to rising costs, national insurance, energy, income tax, VAT, basically the cost of doing business.
Exactly. And when you think about Morrison's employing, what, 95,000 people?
Yeah,
Closures like that have real-world consequences for jobs and local communities. It brings those abstract economic pressures down to a very tangible level.
definitely makes it real. Now, there was also this more theoretical point, maybe,
Yeah.
about past economic performance.
The idea about printing money or digital currency creation.
Yeah, that the good times might have been partly fueled by just creating more currency, described as double accounting in the source. What's the thinking there, essentially?
Well, the basic economic principle is that if you significantly increase the money supply without a mashing increase in the actual goods and services produced.
Prices go up, inflation.
Exactly. More money chasing the same amount of stuff. The argument in the source seems to be that this can create an illusion of growth initially, but the consequence down the line is inflation.
And maybe other things, too, like those longer waiting times mentioned, the optician appointment example.
Potentially, yes. It could suggest a mismatch.
Yeah.
The money is there, perhaps, but the capacity to deliver the service hasn't kept pace. It's a symptom of the system being under pressure.
So we could be feeling the effects of past policies now through inflation and maybe service issues. Interesting. Okay, let's shift gears slightly. Inheritance tax.
Right. Another hot topic in the sources.
They mentioned a record inheritance tax haul, £8 billion in 2024, apparently way up on the last decade.
A very significant increase, yes. A 100% rise over 10 years, the source notes.
What's driving that? Is it just more people dying wealthy?
Well, partly it's about inflation interacting with a fixed threshold. The amount you can inherit tax-free is £325,000.
Okay.
But that number hasn't changed in a long time. Inflation means house prices, asset values, they've all gone up in nominal terms. So more estates are simply crossing that £325,000 line.
So the threshold hasn't kept pace with rising asset values.
Exactly. The source suggests if it had been indexed to inflation, it might be closer to £500,000 or even more now.
So, in effect, inflation is dragging more states into the inheritance tax net. It's like a stealth tax increase.
That's one way to look at it, yes. And the sources highlight real concern about this, especially for farmers.
Because they might have valuable land, but not much cash.
Precisely. Asset-rich, cash-poor. Finding the money to pay a 40% tax bill on assets over £325,000 can be incredibly difficult.
Leading to farms being sold off, family farms.
That's the worry expressed, that they might have to sell to larger companies, maybe hedge funds or big food corporations. The source even questions if this outcome is entirely accidental.
And the rules for farmers are changing specifically, aren't they?
Yes, the source mentioned a significant change. Previously, there might have been exemptions or lower rates in certain circumstances, but from next April, it seems to be moving towards the standard 40% on assets above the threshold for many.
That sounds like a major shift for the farming sector.
It certainly could be. Now, the source did mention that little loophole, or rather, planning tool.
The little hack.
Yes, about gifts. If you give away assets more than 7 years before you pass away.
They fall outside your state for inheritance tax purposes.
Correct. That's the current rule, a key part of estate planning.
But there's talk that might change, too.
There's speculation mentioned, yes, that the 7-year rule could be altered or even scrapped, maybe alongside further increases to the tax rate itself. It creates a lot of uncertainty for planning.
Yeah, planning becomes tricky if the goalpost might move. Okay, one last, slightly different point that came up briefly. Geopolitics.
The Royal Navy in the Taiwan Strait.
Right. Sending a ship through there. Why is that relevant to our economic discussion?
Well, the source included commentary questioning the wisdom of it, pointing out the disparity in military size between the UK and China. Words like madness were used.
Suggesting it's a risky move.
Yes, and potentially provocative. The link to economics is perhaps indirect, but, well, geopolitical instability isn't generally good for economic confidence or global trade.
So risky foreign policy moves could have unforeseen economic consequences down the line.
That seems to be the underlying point the source is making, a concern about wider strategic judgment, which could ultimately impact the economy.
Okay, so wrapping this all up, it feels like we've touched on a whole cluster of interconnected economic challenges.
Definitely. The potential for a downturn, high debt levels, the squeeze from taxes, businesses facing headwinds, inflation biting.
And even those wider geopolitical ripples potentially playing a part.
And just to reiterate, these aren't our opinions. This is all drawn from the analyses and reports we looked at for this deep dive. We're trying to give you that consolidated picture.
Exactly. So maybe the final thought to leave you with is this. Given all these overlapping pressures, recession risk, debt, taxes, business struggles, inflation, what do you think the longer term implications might be? For the country, obviously, but also for you personally, for your finances.
Yeah, and what questions does this raise for you? What haven't we covered that you think is important in this picture? Something to mull over.